Welcome to our Short Verticals webcast, everyone. It's 2 p.m. Eastern Time, and so I'm happy that you joined me here. We meet every Thursday at this time for our Short Verticals, and I know many of you use that Short Vertical strategy, kind of a bread and butter type of strategy in your arsenal. Now, today, for a first thing, we need to update our watch list. We've been using a class watch list, and we update it maybe every 4 weeks. This is going to be about 5 weeks since we updated our watch list. We're going to do that from the get-go. And then we're going to dive deep into the stocks that are on that watch list. Now, more likely than not, a lot of them are going to be the same. I don't expect huge changes. In any case, we'll be doing that. Now, I hope you are following me on X. I'm Connie Hill, CS. We have the pleasure of having John McNichol in our chat here today. I'm happy John's here. And he will be helping me maybe fill some questions that I can't quite get to. I'm going to encourage you to keep your comments on topic, okay? Had a little bit of non-topic related things being discussed, so just encourage you to do that. Now, let's go through our disclosures and we'll lay out the agenda. Options carry a high level of risk and are not suitable for all investors. Certain requirements must be met to trade options through Schwab. What we talk about is for information and education. Don't consider it a recommendation. We will not be using commissions or fees in our discussions here today. We will be using the Paper Money software application. It's for educational purposes only. I think it's a fantastic tool as you're trying out new strategies, to try them out in an environment that is not going to hurt you. You can make a lot of your mistakes in there. Investing involves risk, including the loss of principal. Oops, let's see. Skipped one too quick. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. An in-the-money option has a higher risk of being assigned early. One significant difference from the live markets and our paper money is that in paper money, it will not assign you early, regardless of you're in the money really deep or not. It just doesn't do that. So you need to be aware and not get a false sense of security. Past performance of any security or strategy does not guarantee future results or success. Now, as I mentioned at the top, it's time for us to update our watch list. So today, we'll update our watch list. We'll take a look at our markets, and we're going to be reviewing the process I'm trying to help you develop in your mind so it just becomes second nature to you. Okay, so that is how we are going to proceed. Let's hop over to Thinkorswim. And we are going to start out at the Scan tab, and I am going to reset it, clear everything out for our watch list. Now, some of you have been with me over the last several weeks, and hopefully you're getting accustomed to how do we build this watch list? What are we looking for? Okay, so item number one that we are looking for is price. And so I'm going to choose last for the last price. And typically we're going to go at $40 here. Some of you might have a lower threshold, not 440. If you have a lower threshold, that's just fine. That's just what we're going to use in here. And then we are going to add a study filter here. As a reminder, study filters don't work in paper. You have to do them in your live account. And we're going to get rid of this. And we're going to look for volume. And we're going to look for average volume over a certain period of time. We're going to look at it more recent. A lot of times short verticals can be trades that are in a shorter type time frame. So we don't need to see what the volume was over the last year. We're really mainly focusing on more recently, the last month, where we've seen that volume. And we've been putting this here at 2,500,000. Okay, that's what we're using. Why such a big number? You know, when you're trading stocks, you could maybe go a tenth of that, right? You could look for 250,000 shares being traded daily. But if we want liquid options, we need to have a lot of trading activity, because those that aren't traded as widely have a tendency to not be really liquid. And therefore, what we're going to see is their bid and ask spread. They're going to be a little bit wide, which we'd like to avoid if we can. All right, that's not the end of our scan, but I am going to put this to 200. And before we add our last filter on here, I'm just going to do a quick scan. Let's see how many it would bring us back right now without this other element? Well, it's got several that it can show us. There's a lot of stocks over 40 bucks that are trading 2.5 million shares. Okay. Now, the next thing that is really critical here, we're going to use two public watch lists, and we're going to intersect with those watch lists. So we are going to scan in, and the first one we're going to do is the NASDAQ 100. Okay, so we're going to choose, let's see, where'd it go? It's going to be on here, NASDAQ. I got to get to the right spot, NASDAQ 100. So it'll be going through that public watch list of NASDAQ stocks. They've got to be 40 bucks and trade at least 2.5 million, which might filter out some. Okay, not a problem. Looks like maybe that was bringing in some option information there. Let's go ahead and scan it again. And I'm not liking what I'm seeing here. Let me come over here to my columns and go to custom, see what is happening here. We do kind of need the symbol in there, but we really don't need the option symbol. Not sure why that's coming in here. So if you have an idea, feel free to let me know. Cancel that. I'm going to reset this again. All right, I'm going to just reset. And I wonder if I grabbed, let's just reset it. We'll do it over again. I think it's because I've got option over here. And what I really need to do is be on Stock Hacker and not Option Hacker. All right, problem eliminated. And get rid of that, get rid of that. All right, we're going to our last price, 40 bucks. Then we're going to add our average volume. Volume average. And again, we're going to make it over the last 20 periods. And we're going to make this, instead of 1 million, we're going to change it to 2.5 million. Make sure I've got all the zeros in there that we need. I'm not short. All right, that looks good. 2,500,000. Now we'll go ahead and run it. And we'll get a lot more reasonable number. All right, so 244 stocks that meet that criteria. Now we're going to do a cross selection here. So we're going to go the public watch list of the NASDAQ 100. And you can use this. This will filter out a little bit more. Not a ton, but this next thing will filter out more. And that is intersecting this with penny increment options. What are penny increment options? Well, they're a list that Thinkorswim has developed and put in for us to be able to use, that typically the options trade in penny increments, like you might see at 2 cents, 7 cents, something like that, as opposed to a nickel and a dime and 20 cents. Okay, that gives us the idea of more liquidity. So let's go ahead and let's intersect with another public watch list. We're going to go for the P's, and we're going to choose penny increment options. Okay, that's going to filter between those two. It's going to filter things down quite a bit. Let's go ahead and hit scan. 24. Now, again, if you didn't want to add this last one about the penny increment options, you don't have to. But we are trying to just build a watch list of go-to stocks that we can go to for bearish, for bullish, that has plenty of trading liquidity, that we, for the most part, are not going to worry about trying to find open interest, because normally it's going to be there for us. Okay, so this thing we are going to do is we're going to do we're going to save this watch list. We're going to give it a name. What I've been calling these lists are class, short verticals, and then I've been putting the date. Today is the 29th of May. So then we know, hey, how often we need to go update this. Like I said, it's been about 5 weeks since we updated, and we're going to go ahead and save that. Now we want to make an adjustment here and run it through the S&P 100 as well. Some might choose S&P 500, that's fine. Just for our class purposes, this is what we've been doing. So we're going to come down here. We're going to find our public S&P 100. We're still going to leave the penny increment options. We're going to scan that. All right, nice. We got back 43 on that one. Now, what we want to do is basically take these ticker symbols and add them to our watch list. However, we're going to have to be a little tricky about how we do this. We're going to have to do an Excel export. So this works best if you bring your Excel up or whatever spreadsheet program you're using. I can't say that I have done it in any other spreadsheet program to know about compatibility, and somebody might ask me that. If you know about the compatibility, great, you can feel free to share. And then what we're going to do up here is we are going to have to get the right one. The menu right below on demand, we're going to export this, and we're going to export it to Excel. And really it's going to, let's see here, to paste this. I didn't quite catch what that said all the way. Let's try it again. Maybe I'll do to file. That's what I've done in the past, is a to file. So it'll send it to my document exports folder. And I'm just going to put today's date, 5/29/25. Don't worry if it's a CSV, that's just a file format that makes it easy to retrieve the information. Okay, so we'll go ahead and hit save. Now what we're going to do is I am just curious if this put it in my downloads. Now my downloads are on a different page than the one you're seeing here right now. And let me just see. All right, don't think it did. So what we're going to do, I've got my Excel here. I'm going to bring it up. We're just going to do a blank workbook. And then we're documents, exports. There's our 525. And let's do this a little bit. We need this to be, take the default there, and then do next. And you can do a comma here. We're going to have it separate our columns wherever those commas are. And that's what the CSV stands for, comma separated value. And we can see here, we're going to have our ticker symbols. Then we'll go next. And we're going to put this to general. That is fine. All right, there we go. That's all I was trying to do, just get that little spreadsheet over there. I apologize if you're taking notes, that may have got mashed up a little bit. And what we're going to do, I'm just going to put my mouse in that first ticker symbol, XOM. We're going to head down here. Essentially, we're going to highlight these. And then we're going to import them into the watch list we just created on the Thinkorswim platform. Okay, so now we're going to head back. I don't know what the error message was on Thinkorswim, but this is what I did. I pulled up the file we created first with the NASDAQ 100 stocks. Okay, next I'm going to go over to Excel, and we're just going to take these ticker symbols, and I'm going to do a Control-C, and that puts it in the computer short-term memory. Okay, that's all we're going to need there. Then we're going to go back to our watch list that we created. We're going to select on it. We're going to say import. Now, I told you it copied those symbols to the computer short-term memory, and that's called a clipboard. Okay, so I'm going to say paste it to our clipboard, and lo and behold, here are the ticker symbols. The first ones probably look familiar. And then you got to make a choice here. Do you want to replace the current symbols? No, we want to add to, because we want it to add to that initial NASDAQ spreadsheet, okay, or watch list rather, okay? Sorry, that's a simplified version of how it should have worked the first way, or the first time. Let's go ahead and say okay. And now we have a pretty decent size watch list here. Now I am going to change this to percent today, just kind of what the movement is. And let's start, now that we have our watch list, number one, just remember, if you follow this scan, the results they'll change. As frequently as data changes, if you go and run it, the data will change. However, you probably don't want to be, searching machines all the time. And so create this kind of watch list, and then it can be your go-to watch list when you're looking for trades. All right. Now, step one in our process, if I were to ask you, what is step one in our process? I hope you're starting to come up with the answer yourself. So tell the dog, tell the computer screen, what is the first step that we're going to do here? And I'm just going to make a note and maybe make this area a little bit smaller. Yeah, we're going to call it our market posture, okay? Are we looking at the markets for bearishness or bullishness, sideways direction? So we're going to go do that next. So took a little bit longer to develop our watch list. Usually that will be pretty speedy, okay? But let's go do our market posture. I'm over here to charts. And let's go ahead and just get, say, a 6-month chart up here. Don't have any moving averages on because it's kind of vanilla as we come in here. I'm just going to leave it alone. We can see we had this tremendous pullback. We have what we call a V bottom, where when it finds the bottom, it just kind of rallies up, okay? And so we've had this V bottom running up, maybe a little bit of a flag formation here, kind of breaking out of that flag formation 3 days ago, but not following through yet. But it looks like it's staying above that 58.60 support level, okay? So certainly still making higher highs and higher lows as it recovers off that bottom. Okay, so we use the S&P 500 or 100 for part of our watch list, and then we need to look at the NASDAQ. So we're going to look at the NASDAQ 100 and see what it's looking like. It is pretty similar, isn't it? We can see we had a major sell-off in the NASDAQ as well, and then after it bottomed out in April, started making some higher highs, higher lows. We might notice this kind of move here. Some people might look at that for maybe a flagpole where we have price action just kind of going pop, pop, pop up, not diddly-dallying along, okay? Had a 5-day pullback, and then here again, like I said, 3 days ago, it broke out of that flag. Hasn't really moved beyond it, okay? It's kind of just staying in that breakout area, but it is staying above the support level here. And so, yeah, even today, it made a little bit higher high. So great. We have a tiny bit higher high, and we've got a little bit of a higher low here. All right. Let me see what George is sharing here with us. Looks like maybe something custom. Okay. Very good. Are you bullish or bearish so far? What do you think? Tell yourself what the answer is, okay? We're going to look at volatility index because we always want to know where it is. Is it in a high range? Is it in a lower range? It is in a lower range. It's not as low as it has been in the last year. Last year it's been down 12, 11 kind of area. And it's pulling back to, I'm going to say, areas that are a little bit less volatile. Okay, so looks like right now it's at 19, it's been at 17, 18, but we can see relatively low levels compared to these peaks up here. Or even when it gets up here to 40, that's pretty volatile. 35, fairly volatile. Where it is right now, not so much. Okay, so posture-wise, tell yourself what you think. Are you bullish, bearish, or neutral? Never Eat says you are bullish. Appreciate you chatting that in. Yeah, so as we examine our watch list for candidates, should we be focusing more on bullish or bearish entries? Okay. Tell you what I typically will do here. We'll sort this by the movement today, because just because something's up today, it doesn't necessarily mean that it's going to be up all the time or that it's in an uptrend, but they are stocks that might be good candidates to do that with. And we have what, maybe about 60 stocks on this watch list now to work with. Maybe not quite that many, maybe it's closer to 50, because there was some overlap on those, the NASDAQ 100 and the S&P 100. All right, so as I'm looking at things here today, I'm going to kind of show you what I was seeing. And I hope things haven't changed too dramatically here. Let's start out with NEE. NextEra Energy. They had kind of some bullish news, even though they look like they had a major drop down here to support, and they're kind of hanging at support. They had some analysts change their price target. Some went to $84, which is clear past where their high has been in the last 6 months. So there were some that went up to 84, another one up to 94. So recently, it's kind of getting a little bit of love from the analysts. Okay. Now, in our class, we're either going to do a short put vertical or a short call vertical. Because our outlook and our posture is more bullish, we're looking for those short put verticals. So then we're going to say, well, what kind of signal are we looking for, right? We don't want to just jump in any old time. What are we looking for and focusing on the chart? So on our bullish entries, we might look for a support bounce, a close above the high of the low day. A moving average bounce is a possibility, or a breakout above resistance, or a breakout of a pattern. And then some people, specifically some traders on short verticals, if the stock is at or near support, sometimes they like that before they actually get in. Now, this one actually today is having a little bit of a bounce. It's up, 2.4%. But there is quite a distance for it to move up before it gets up to that 73 resistance area. Okay. So some traders might, be licking their chops at this point on this particular one. Let's go ahead to the trade tab. All right. So the second step is, I'm going to bring this up. We did our market posture. We review our watch list for entries that are in line. So I'm going to say watch list entries, okay, that kind of meet our rules, that what we're looking for. So let's get rid of this. Not sure where he came from. Let's go ahead and see what is possible here. Now I'm going to tell you the ones we're going to use on all our trades today are these June options that have 22 days left. If you wanted to be a little bit shorter, you could. There's not a lot of time left on these. 20 to 40, maybe sometimes 50 days is where many traders like to target as far as how much time they're selling, in this case in a short put vertical. And liquidity, because they're monthly options, is pretty decent. If you did want to go a little bit more aggressively and look in the weeklies, you certainly could. But time decay is just really diminishing right now. So as we look at this, let's see if the strikes I picked out initially look decent here still. I was looking to do 66.65. Let's see what kind of a credit we get here. If it's not meeting our rules, then we'll slide down a strike price. All right, I'm gonna lock that in at 26 cents. Now, at the top of your head, some of you are going to know what kind of a return that is, right? Max gain of 26. We're going to divide that by a max potential loss of 74 per contracts, okay? So on our calculator, 0.26 divided by 0.74 is going to give us about 35%. So that might meet many traders' rules. They say, oh, cool, we get a little bit of a delta, a little bit maybe further out of the money than maybe what we target sometimes. And the premiums are pretty decent. Can you see how these are trading in penny spreads of 78, 102, 134? That's what kind of bringing that in and seeing those types of tighter bid-ask spreads. Okay, so in our class, we are willing to risk $1,500 per trade. Well, let's do a little math, see if we even want to go that high. Okay, if we have 1,500 and we divide that by our max theoretical loss is 74, that's going to tell us how many contracts we could do, and in this case, 20. Now, if you're somebody that trades 20 contracts at a time, fabulous, all right? You'll notice our short strike here at 66 is not nearly as liquid as what that 65 is going to be, right? So some people might go, oh, I don't want to be a big percentage. We add 20 to 462 plus maybe 15 today, but we don't know how many were closed out. So if you're a little uncomfortable with that 20, back it off, okay? This is probably okay, but let's just do 15, okay? We're going to back it off a little bit and just only do 15 contracts. All right, next up, we need to say we want to get out when we get a chunk. Did anybody think of me last week when you brushed your teeth and you looked at your toothpaste container? Last week I showed you my toothpaste container and said, sometimes short verticals, it's best not to squeeze every little penny out of them because many times you're increasing your risk. Okay, so I said, we get most of the toothpaste out, most of the pennies out, maybe it's okay to go and buy our spread back early. And we always put an entry or an exit order in at the same time. So we're going to do a first trigger sequential. We're going to create an opposite order here. And if we get, in this case, let's go for something that's been pretty traditional here, 70%. If we get our 26 cents, if we get 70%, only 30% is left. So I'm going to multiply that by 0.3. That says go buy it back at, let's round up and say 8 cents. Okay, we're going to say 8 cents. We are going to make it good till canceled. We're going to do a confirm and send, and we're going to send it to our bull short verticals that we're tracking here. All right. See, it says, what's the best delta to use for short verticals? Many traders might use a range, right? As opposed to one specific delta, because sometimes we don't get a specific delta. So they might go in a range where maybe it's a 30 something. Sometimes people might look at a low 40 something delta. Sometimes, like in this case, that's a 28 delta. So it's a higher 20-ish delta, but it's still giving us the kind of return we're looking for. Another thing is if you felt like, oh, maybe it doesn't need to be that 35% return, you could experiment with, going the next strike out and just kind of see what that puts you at and if it meets what you're looking for as far as short verticals. All right. Hopefully that makes sense. Yeah, John said, between a 0.3 to a 0.4 delta is really kind of the sweet spot there. Ricebird said, I'm good when we're talking about exits getting 70 to 80% if the market is bullish. If it's not bullish, he settles for about 50%. That's a nice input from you, Ricebird, sharing with people kind of what your personal approach is with this. All right, we need to get another trade on here. And again, this is going to come from our new watch list. I'm going to clear that out for a minute, bring up our watch list. And I didn't write down here the last step here, which was, we didn't really talk about volatility here, but what we might want to do here is just make sure it gives you a return that you're comfortable with. Okay, so I'm just going to say an ROR, return on risk. Okay, this first example was about 35%. All right. Next up, we're going to take a look at the second stock sitting here, Gilead. Let's make sure we get on Gilead. What's going on with Gilead? 6-month chart, again, you can see had some nice support here, around 95 or so, maybe even a little bit more. And then it started forming higher highs and higher lows. Okay. What kind of an entry is it giving us here today? What kind of an entry is it giving us? We've had kind of maybe a nice little flagpole, actually a nice tall flagpole, a little pulling back, and then kind of maybe even a little kind of sideways action flag flying in a stiff breeze. It was down a little bit and then it's in a stiff breeze, but basically we're seeing a little bit of a breakout. Now, Gilead had some interesting news. They have a drug called Trodelvy Met. I take it back, Trodelvy, and it was in a phase 3 of clinical trials, and the FDA gave it some approval for this Trodelvy, which it's a medication that could be used to treat breast cancer. Okay, so they got a pass from the FDA to move forward with that. So that's kind of some recent good news with Gilead that maybe is causing a little bit of excitement here today. All right, now let's go see maybe what they might have available. We're going to use these June 20 options again. It's right in kind of that sweet spot, 20 to 40 days worth of time. We've got lots of open interest here, which I like to see. So initially I was thinking maybe doing 105, 104. Let's see how that lines up. That's at a 30 delta. So we'll say sell vertical. and it's putting us in about 27 cents. Okay, now our first one was 26 cents and was about a 35% return. So this might be a little bit more than that. If you would like a higher probability of success, maybe you could go for, the next strikeout, the 104, that has about a 68% chance of expiring out of money, where we're starting from here at 66%. Those are, typically we're looking for something above 60, so any of those could be. Okay, so you just figure out what matches your return, and I'm going to say the return on this kind of meets our expectation. And this is a stock that generally has a little bit of volatility. It's not extreme. It's not like a stock that's a high flyer going into earnings. But, it's in a little bit of a higher range. I'd say maybe intermediate to high. All right. Let's see. How many of these could we do? Well, if we're going to have a max credit of 27, then our max theoretical loss should be what? Should be 73. Okay, so if we go 0.27 divided by 0.73, that gives us about that 36% return. And then the same thing there. We could do 20 contracts probably, maybe even 19. And if you've got tons of open interest here, then you might feel comfortable doing that. If you're not, then you might not. So let's go 1,500 divided by, in this case, 73. So again, we can do 20 contracts. All right, this time we're going to do it. Okay, we're not going to, open interest is looking plentiful. Okay, we typically don't want to be a lot of the open interest. We just want to be a small part of the open interest. So we'll do 20 contracts there. Let's do our first trigger sequential. We're going to create an opposite order. The math is almost the same as what we did. And so we're going to put this down here. I should say what we did on the first trade. We bought it back at 8 cents. Okay, that's what we're going to do. We're going to make this good till canceled. We're going to send it on the way with the exit order in place. Put that out in our bullish ones. Now, somebody made an interesting comment in the chat. I think this comes from Chris. Chris says, Connie has described these as patience trades. Yeah, they do take time for all the time to decay. We've got several examples out in our bullish list. I'm going to show you here. Oh, but there we go. Open up the right grouping here. And you can see we've got several sitting out here. Most of them seem to be doing pretty good. All right. Here's our Gilead that we just put on. It's not filled yet. It doesn't look like. Oh, it did fill. I probably didn't put it in the right category yet. In any case, let's take a look at this one. Let's take a look at CrowdStrike. All of these have 20 days to options expiration. They're all those June options. And so let's go look at what we're working with here. So CrowdStrike, we got in right off this nice diagonal support bounce. And what's it done? It's gone higher for us. Our short strike here is 400. It's a 390, 400 short put vertical. So it's doing what we want it to do, which is why it's sitting in a favorable position. But it just takes some time for the time decay to really melt off. Now we're in a phase with the time decay, right? If this kind of were a representation of time decay, up here, it's not decaying very quickly, but once it starts sloping down, it gets kind of into that last month of the option's life. Then we start to notice time decay going a little bit more rapidly. That theta gets elevated. Okay, so on this one again, I'm going to say, yeah, we just probably need to be patient with it. Let it do its thing. We've got our exit orders sitting out there in the working orders for us. Let's see a different one. They are basically our trades of patience right now. I would agree. So our Walmart's doing well, 40%, 41%. Goldman Sachs is one I actually put on after our class because I wanted to have some additional ones to monitor. And it too is about 22 days worth of time. Let's pick on one that we're down on a little bit. Let's pick on PLTR. And PLTR, we've got a short put vertical, 115, 117. So 117 is our short leg. What do we need the stock to do? Stay above that short leg. Now this one, I guess I have not marked it up. So really typically what I'd do is I'd come in here and say, well, where's 117? And it's down there, put a line there so we can keep track of it, knowing just kind of visually what the stock is doing. Now we got in here and it didn't actually continue with that breakout. It's come back and maybe created a little bit of a long flag. Looks like maybe it was trying to break out of it the last couple, 3 days. I would just say mainly it's hanging there at support. So again, should we be concerned about it? Probably not. Do we need to just let the trade work? Yeah, I'd say we need to let the trade work. That's actually true with all of these. And again, we have our exit order in place. Some of them were 65%, some were 70% of the max gain. Basically the idea that, hey, if you're going to decay for me and get a chunk of it, let's go ahead, check ourselves out of the trade. All right. So to summarize, we put on a couple of new trades. We put on Gilead and EE. We updated our watch list, and I hope that even though it was kind of a little technical issue there, hopefully you get the idea of how you can just create that same watch list by using those public watch lists. All right. Just see if there's any ones that I need to look at. Ron says, well, how do you decide between a short put vertical and a long call vertical? Some people might use how big of a move they think the stock might make. If they think maybe it's going to be a shorter type move, they might consider doing the short vertical, right? Because you just need to, on this put spread, just have it stay above a point. In a long vertical, many times we need the stock to move. And so many times it boils down to that. Now in our class, it is just about short verticals. So those are the only types of trades that we're going to place in here. And somebody might get familiar with that strategy. Like I said, it could be their bread and butter. They just feel more comfortable doing that kind of strategy. They've worked out their rules. They've worked out their patience, those types of things. All right. Well, John, thank you for helping me out in the chat here today. He has posted that survey one more time. We always appreciate it when you give us some feedback on the survey. 2 radio buttons, plop, plop, you're done. Or you can answer a question, and if you want to use the space to tell me something that you'd like me to incorporate maybe into one of my future webcasts, go ahead and put it there as well. All right, up next, we're going to have Getting Started with Stock Investing. Kevin's going to be back, and he will get going with that session right at the top of the hour. All right, thank you, John, and everyone. We'll see you soon. Bye-bye.